On today's show, 3 questions. Number 1, is the government watching its wallet? Number 2, are you going private in your 401k? And number 3, why is no one talking about Bitcoin? Welcome to Dennis Money's 2 cents, where we have Dennis navigate all the noise. I'm Matt.
I'm Jake.
And I'm Rabih.
Yeah, you are. Rabih's been begging for a third, Jake.
I know.
For a while.
It's been a while.
It's been a while.
Yeah.
It's been hard.
I've been throwing hints like, Matt, there's nothing going to happen in the market this week. I won't
not
have
so,
a topic.
Not so subtle hints like, hey, can we get a third? The problem is I go to schedule, and then if I do it the week of, everyone's just too busy and there's no room. And so I had to, anyway, it took me a while, but I finally got people on the schedule for the next month or so. So we're going to have the trifecta together.
I'm stoked
we have
to be
Cody
here.
coming, by the way. Cody coming next week.
Very good.
Little teaser.
Yeah, it's always fun for me. We just spent 20 minutes talking about AI, which was fun before the podcast.
We do this sometimes where we get on, and before we even hit record, we just talk for 20 or 30 minutes and give all our hot takes, and then we save some.
We save some hot takes for
save
this,
them for the show.
Fun. Yeah,
exactly. So okay, let's jump in. Rabih, is the government watching its wallet?
Yes. So, and actually, this is a special request from you, Matt, because you mentioned it on a previous podcast. You wanted to know how the monthly budget for the federal government is doing. And this week, we got the data. So, according
to Trump, it's trillions, by the way. We're making trillions off of tariffs, is what I heard.
Fortunately not. So...
Not true.
Not true. So last month, right, we got the data and it was a surprise $27 billion surplus in the budget. And we weren't expecting that to come in, right? And we expected that maybe this is a change of path from, the impact of tariffs, etc. But that immediately kind of disappeared, and we got the July deficit versus surplus for the government's budget. And in July, we had a deficit, so outflows, of $291 billion. So that $27 billion, I think we were kind of right in our analysis that it was not really anything different than zero. Like if it was a negative 10 versus a positive 20, it's nothing, given that the magnitude of the swings is usually $100 billion a month of outflows. So I got some data about it, and let's get your guys' opinion. So what it has over here is that the U.S. government posted a $291 billion budget deficit in July 2025, despite a $21 billion boost in customs duty collections from higher tariffs under President Trump as spending outpaced revenues. So we got a month, right? The plan was to do $2 billion a day in revenue from tariffs, $2 billion a day times 30 days. That is around 60 billion. We only got 21 billion from the tariff impact, right? And the remaining spending is just because the government is coming from somewhere where we have a lot of spending. The shortfall was $47 billion larger than a year earlier, and receipts were rising 2%, but outlays were jumping 10%. So what it means is that we know that every single month has cyclicality. Like in April, they're going to make so much money because it's tax season. But if we compare this July to the July last year, it was higher by it was higher by $47 billion than it was as is. I'm just going to not go into any more numbers and say 20 billion out of 291 billion, that is a 10% impact on the monthly budget. But the monthly budget is so huge that we do not think it's going to be moving the needle anytime soon. What comes to mind when I mention these for you guys?
I mean, progress, right? That's good. We'll take it. Color me unshocked, unsurprised that it's not making some massive impact. I think that's kind of what was expected. Jake, what are your thoughts?
Yeah, it's just the math. It doesn't seem like it's making that much of a dent, right? And it's not making much of an impact. It feels just in the content that I consume and the conversations that I'm having. Are we past the tariff thing? I just am not having a lot of conversations about it. The market doesn't seem to care about the whole tariff situation. Does the economy really care? I guess we'll see this fall. Everyone's always still pointing to this fall of Are we going to see impacts, inflation rise and prices go up? I think we're starting to see that in certain areas of the economy. But I'm just color me, I don't know if it's bored or fatigued with the tariff conversation. Like, I just feel like, I don't know.
Yeah, like in summary, if you compare it to last year, you are spending $47 billion more. This is taking into consideration a 20 billion that you added from the tariffs. So on the whole overall trend, you are still going into more and more debt every single month, right? When you compare it year over year. But your progress is not really moving the needle. I have one more take on this actually, where I think those 20 billion are not going to last long. So this was June and July, right? This was July. And there was still a little bit of uncertainty on the direction of these tariffs. And a lot of companies, from the company perspective, they'll be like, okay, we'll leave our supply chains as is. We'll let the tariffs we'll let the goods go through the original channels and pay the tariffs for it now, right? But 2 months, 3 months, 4 months from now, a lot of companies are going to find the new path or a new efficient path, the paths that from their perspective are the cheapest, right? And that could very much be paths that do not go through the gateways, the new tariff gateways that were put in place. And that $20 billion number might actually be going down. So it was just a one-time spike in revenue simply because companies haven't had enough time to adjust their supply chain connections yet. So unfortunately,
So you're saying less of an impact long term than even what's happening now.
yeah, like this 20 billion is just because it caught companies off guard and now they need some time to readjust contracts, to readjust routes, etc. in a way that is, they're looking after their profitability. This is what they should be doing. And that could be a path that will not generate 20 billion. It might generate 10, 5, etc. So, and think of it that way. We're saying that the economy is still doing good, right? Inflation is stable, unemployment is stable, but suddenly we are making $20 billion more. This doesn't make sense in economics. There is no free lunch. So that 20 billion is going to come somewhere. It could either come from companies changing their supply chain. It could come from a one-time inflation hit. It has to come from somewhere.
And yet to be seen where that is.
100%.
Yeah.
Yeah. Fascinating.
We just spend too much money as a government still too,
Yeah.
I think.
We are on path to get to a, 1.5, $1.6 trillion deficit to be added to the 36 something trillion of debt that we have. So yeah, unfortunately, it's been very hard to steer that ship from the direction it's going.
Yeah. Yeah, then there's just too many, obvious places to look when it comes to government spending that no politician will look, right? And that's a whole other discussion, but to actually make an impact would be political suicide, and that's the problem, I think. So again, great to see some progress here, but don't know if, to your point, Rabih, A, it doesn't make much of an impact now, B, there's a reason to argue that it'll go away sooner than later anyway. And I'm with you, Jake. It doesn't seem like anyone cares anymore.
I wonder what derails the economy. I think we've been saying this for a while now, and something will eventually in the future. Something's going to come up unexpected.
Well, you just caused it. Thank you.
Sorry.
This is like watching, dude, you know what that was? This is like watching a football game.
Yeah.
And the announcer's curse of like,
guys.
So-and-so Smith is 20 for 20 this year. This is a game win. Oh, he missed a 30-yarder. Thank you, Jake.
I'm so sorry. That. I just find it fascinating where most smart economists and people I listen to are like, this tariff idea is a bad idea and everything that Trump is doing is a bad idea. Yet the economy's in a pretty awesome spot. So if his ideas are so terrible, why isn't it having a bigger impact in our lives would be my retort. And I'm not smart enough to analyze every different angle, but obviously the housing market is still an issue that a lot of people do not like about the economy. That's like the one piece that probably is broken. But like you mentioned, unemployment is low. Inflation has cooled off. People are still spending and traveling, and the American consumer is still really strong. Currently, net worths are going up. Balance sheets look really good. And so I always just hear about these bad economic policies that Trump is putting into place, but I'm yet to see that actually derail the economy a little bit. So I just find it fascinating.
I love that you mentioned that. And just to give you the other side of the equation, I'm not necessarily saying which side I'm on, but the same thing is happening. Trump has been saying that this new policy that he's proposing is just going to jumpstart the economy and move us to a stronger, better, different world. But if you look at the data, the unemployment is still where it is, inflation is still where it is, GDP growth is growing at the same pace. It's the same economy that we had in 2024. So that it didn't have an impact to the upside nor to the downside, simply going back to how massive the economy is. You're talking about a $27 trillion, truck, and you're trying to you put it in neutral and you're trying to push it by yourself. If you're not going to move it, its momentum is what's going to carry it forward.
Yeah, and that's my point. This is not a commentary on Trump and if he's doing a good job or a bad job. It's more of I just want to say, I think we are at our economy has become so big and so massive, and there's a ton of moving parts and so complex, or it does seem like a bit of a freight train right now that just keeps on moving despite all these things that people think may derail it. And so I just think that's interesting.
Yeah, I totally agree with both takes and we've said this many times, that not like you've got both sides where you have Trump. It feels like everything is breaking news. Like I saw a thing this morning at the gym that was like, breaking news, all caps, Trump gets on plane to go to Alaska. He's meeting Putin. And like we knew this 2 weeks ago. They announced it 2 weeks ago that he was doing this, but now it's breaking news that he got on the plane. I guess my point is that like we're like throwing pebbles at a slow moving elephant. It's like it's doing nothing. And that people, the news and all this stuff, to your point, Jake, it's not commentary whether or not Trump's doing a good job or not. It's just that nobody knows and everyone's clout chasing. And everyone wants to be super bombastic and emotional and like, oh my gosh, this is going to break everything. I think 90% of the news now and people making commentary is just clout chasing.
Yeah, well, to put a positive spin on this, which I always tend to like to do, I try to be an optimist here. I think that's pretty cool where the people are worried about, can any one person or any one policy really impact this huge economic machine we have going? And I think there's growing data that no, again, we're just getting really complex and really big and interconnected with other countries. And it's just this huge thing. And it's kind of nice to see that the economy can keep chugging along despite some of these policies that people may not agree with or think are lame.
Yeah, I think that's a great point. Rabih, what you got? You're nodding.
I love it. I'm just going to say breaking news. Listen to this podcast Saturday morning,
There you go.
The jinx, I'm knocking on a lot of wood here. I'm knocking on a lot of wood.
Yeah. No, I think that's a good point, Jake. It's we've got counterbalances to the nth degree to where any one person can't really have that big of an impact.
And Jake is right. Like Jake is not, what he's saying is what's been happening. Like the last time we had something that derails an economy was COVID, right? But during COVID, they didn't just, lower interest rates. They had to lower interest rates, give stimulus checks, organize currency conversions between all central banks in the background between all companies to maintain currency stability, all for not to have it derail even further and try to stabilize it. Like look at the magnitude and the quantity of mechanisms that had to go in place at the right time for them to actually control the shock the economy faced during COVID. So now you're just saying, oh, I'm going to get an executive order with tariffs and that's going to change, No, we need more. You have to attack it from multiple sides. The economy has become too big.
Yeah, it's a good point. And to Jake's point, which again, he's now started the ball down the hill, something will derail it. This is just a matter.
Hold on. Last time the three of us were on a podcast, the S&P was negative for the year, and you both called that we're going to be positive. We're up 10% year to date.
Let's give a quick S&P watch. I sent this in our internal Slack to Jake specifically. And it's like with the eye emoji. It's like, look, Jake, we're double digits officially. So
now if Jake is making a prediction, I'm going to take it serious.
Yeah,
I had my one that was right, out of 50, that actually came. It goes back to what we're talking about, where just if you look at different parts of the economy, a lot of things are strong and a lot of things are really stable. Again, the housing is kind of off on its own thing, and I think that's what a lot of people anchor to. Like that impacts our day-to-day lives a lot. It's just the housing situation and interest rates and things there. That's brutal. But besides that, I mean, people are still just spending and growing, and unemployment's low, and people are getting paychecks and other parts of the economy are just really solid. And so these companies can just continue to report earnings. And that's why my just guess was nothing's really breaking here yet. And so I think we'll probably recover was my hypothesis.
Yeah, it's interesting, Jake. Now that you say that, it's almost like, are we living through, I really do think there's a possibility here that we're living through almost like a complete like psychological shift in the economy, meaning housing and owning a home used to be the foundation of this quote unquote American dream. Now that's becoming much more difficult, even though the underlying aspects of the entire economy are really strong and have been for quite a while. So it's almost like we just haven't caught up yet. That like maybe the home is like maybe owning a home is no longer the cornerstone of that quote unquote American dream. I'm just saying like that is,
Yeah.
I think that's possible. We look back and say this was the era of like a shifting like psyche or like definition of American dream.
I think that mindset shift is hard to change too, right? Which is why we're
Really
getting a
hard.
lot of moaning and groaning, which because that was still traditionally how people build wealth and build a home. Again, maybe we get to a point where we can have some better economic policies and we can help with the housing situation down the road. Maybe that can all come and recover that. But you wonder too, if the lack of housing availability or people being able to get into a house has also caused the economy to be strong because people are now shifting their money from a house to, well, I'm never going to buy a house, so I'm just going to go on vacation
Yep.
a little bit more, spend like I'm going to go to different
But this is my
concerts and enjoy my life more because I can't buy a house. So I'm going to try and find other ways to benefit my life and invest in the stock market or do other things rather than buy a house.
So that's exactly my point is are we starting like I think there is a possibility we are living in the middle, which is painful. A shift like this is painful when you're grounded in this for the last 50 plus years of like what is this kind of dream. But exactly what you just said, Jake, like are we almost forced now, when I say we, like specifically young people, forced to shift what that definition actually is? And is that alone propping up the
Yeah,
economy
you
and
wonder if
along with AI?
the bad housing market has contributed a little bit to the strength in other areas of the economy, and the
Kind of
stock market
interesting.
is interesting to think
Rabih
about.
is pondering our words.
Yeah, I want to look at the data. I'll come back to you.
Yeah.
But
Okay.
it is a very plausible hypothesis.
Yeah.
It's interesting. Okay, anything else, Robbie, you want to add to the government? So the answer is the government is not watching its wallet.
No, because we celebrated one good month, but it was negligible in size compared to the current trend we're still on.
Got it. Still spending too much money. Okay, number 2. This will be, I think, relatively quick, but I think it's worth mentioning. We should. I actually, it's funny, Robbie. We got off last week, and I was like, "Crap, I should have mentioned this." Are you going private in your 401k? So this has been quite a bit all over the news, at least in our world, in the nerdy financial advisor space and the investing space, where Trump issued an executive order. I didn't know this. I forgot this. He tried to do this near the end of his first term. He tried to do kind of usher this in where private equity is now allowed in 401ks. And I think they're talking about crypto being a part of wrapped up into that. But right now, I think the main thing is just allowing what they're calling, alternative investments, specifically private equity and things like that. I have some opinions on this, but I want to get your guys' take. Any thoughts?
I don't have any off the bat. I'm curious to hear what you guys think. Nothing from me right now.
So, Robbie, do you have thoughts on this?
I do. Definitely do.
Hit us.
I think this law came from the perspective or to serve the interest of financial institutions and not investors. This is that your take too?
Yeah.
Okay.
Yes. That like I'm a little bit more
Gosh dang it.
frustrated than your cogent, very rational take here, but yes.
Okay, so then a dumbed down version, like the calm version of this argument, and you listen to the angry version from Matt in a second, is that from the perspective of financial institutions, banks are the biggest cash cow in the country. Every single month, every single paycheck, millions of Americans are pumping money in an account that they rarely see. Like you do not look at your 401k as much as you look at your brokerage account. If they can secure a spot on that river stream and take fish from it whenever they want, they will do it. And why is it that now PE and probably crypto are being added? Simply because those products still have higher fees and competition hasn't been as strong as in passive funds, for example. So it is a bigger, stream of cash flow that they can take chunks of, and 2, charge higher for them simply because these products are not transparent. So it is a great thing for financial institutions, for the business. I do not know, and I do not believe this will immediately translate to better returns for 401k investors. This is my take.
Robbie said it perfectly. I don't think I even need to add anything else.
Come on, I was waiting for the rant.
No, it's just to your point, Robbie, it is so obvious what's happening here. There's $12 trillion in 401ks across the country, and private equity wants a piece of it, to your point. And it's absolute crap. It really pisses me off, to be honest, because it's going to hurt a lot of people because as we know very well, distraction and chasing shiny objects is a killer and destroyer of wealth at the individual level. And I'm sorry, this is like taking an alcoholic to a bar.
Yeah.
You're gonna put these investments that are shiny and seem cool, and you're gonna have hardworking people that I just don't like it. I don't like it that you're, again, because the intentions are so obvious. Like they're gonna be I've seen arguments made of like, well, the overall public markets are shrinking and the private equity, like we need to give everyone access to the private space. It's like, no, you don't. You actually don't. Everyone's doing just fine in the public markets. And what I don't like about it from a behavioral standpoint is, and I hope this is actually still the case, and Ks are a great way to build wealth, not only because of the access to the investments like public markets, but because of the behavioral aspect, where it's like out of sight, out of mind. Most people don't like treat their 401k like a brokerage account. And my worry is, by doing this and this becoming bigger publicly, like as we announced this on 2 cents, now it's out there to the world because we have so many listeners. Maybe we're part of the problem. But I do think that behaviorally, this could change people's mindsets into like a day trading mentality in their 401k. And I just think that's really dangerous.
Yeah, you guys have said it. It's funny if you go on to TikTok or social media. I think 401ks sometimes get a lot of hate from some of these content creators who are trying to have their hot takes and like, oh, don't put money in your 401k. It's locked up until you're 59 and a half.
Good take.
It's logged to such a way it's tied to your company. You could do more things with that money. But as you're saying, Matt, that's the important part of the 401k. That behavioral aspect of that money's locked up. It's tied to your employer. It's tied to your paycheck. It's going out of your paycheck every 2 weeks or every month without you having to think about it. It really gives you an account that is a long-term account that can be the backbone of your portfolio, instead of treating that account like another brokerage account that you're day trading and putting into Bitcoin and doing things there. It's nice to have that stability. And it really helps people build wealth over time. And so, yeah, you're changing the behavioral aspects of it by going this route.
Yeah,
Jake,
to me oh, go ahead, Robbie.
sorry, Matt. What I wanted to say is, Jake, the good news is those advertisements about don't put money on your 401k because we want it and want to charge high fees for it, those will disappear. Now you'll have new ads that say,
all of a sudden everyone's going to be loving the
yeah,
401k.
put it in a 401k
Come into my
and get this
401k.
private equity fund that will not pay you out for 30 years.
There you
It's
go.
so true, Robbie. All of a sudden, you change the incentive, you change the outcome out. Everyone's going to be touting how great the 401k is, and then put in the 401k, and then do this stupid investment. That's such a good point, because anyone telling you a 401k is dumb, I love this. It's always like, this is a dumb investment. It's like, okay, 401ks are not an investment, but anyone that's touting that is trying to sell you some crap. Now they have the crap they can sell you in a 401k. All of a sudden, 401ks are great. So I don't like this at all. If you can't tell, I don't like it at all. And it's because, again, I just, the lack of genuine, like, it's just because it's so obvious what it's about. It's so obvious. And it's so disingenuous to say this has anything to do with helping the end customer or the citizens of America. That's not true. It's like, you can't make a legitimate argument that that's the case. You just can't. But Jake, when you were going through that, I was thinking, I'm like, Ks are kind of the real estate of the financial world, in the sense of real estate is touted so much, or because there's behavioral barriers to like selling real estate, and it's not as transparent. It's more of a buy and hold for most people. It actually ends up being a lot of times a better investment than a lot of things, not because of the underlying investment, but because of the behavioral barriers. It's the same thing with the 401k. It's like the 401k is nothing special, but the restrictions that people talk crap about online on TikTok are the actual gifts of the thing, are like, it's saving you from yourself.
And to
Which
get
is
to
what I
our
like
point,
about
a
it.
lot of 401ks also have restrictions on the investment selection, right? Where it's like, that's sometimes people are frustrated. Like, I can only invest in these 15 funds with my 401k plan, and that's frustrating to them. But oftentimes these are basic target date funds or index funds that you can put money in. And it's nice that they're almost forcing you to these more, I wouldn't call them conservative investments, but traditional, just access to a broad swath of companies. yeah, if you're getting people who's like, I'm going to put all my money into Fartcoin, right, in my 401k. And it's like, I'm going to put this every week for, that's the cool thing about 401ks is you could like, hey, I've worked at a company for 10 years. I checked my 401k the other day and it's like, wow, that's a way bigger balance than I ever expected. Now, if you put your money in, like I said, Fartcoin, we'll use that term there. It's like, man,
It's
you
a
can
new
put money
one.
for 10 years and all of a sudden my value's been cut in half or 70% because I'm in some speculative asset and I didn't realize it. So that's 10 years of saving out the window.
Yeah. Or again, you just start behaviorally changing the way you approach it because of now you have access to things. Also, the thing I was thinking about, there's so many lawsuits, or there has been so many lawsuits with 401ks over the years where employees are suing their 401k provider, an employer, and all of it almost always has to do with fees, which I think is interesting that now we're allowing, well, I don't know where we're at actually. Like the executive order is in place. So I don't know, like, that's going to go through this process now. But like now we're saying we're going to allow these super high fee investments in 401ks. Like, I just think it's going to be a mess. It's going to be a mess. So keep private investments out of the 401k. Let's just say that. Anything else? I wasn't that angry, was I, Robbie?
No,
No, it's
you
great.
just
I
said, I
like it.
really hate this if I was not clear.
Yeah, I really do. I hate it so much. Okay. Number 3, Jake. Why is no one talking about Bitcoin? Speaking of
Yeah, speaking of crypto here.
speaking of crypto.
I just haven't, in my conversations with clients and people in my life and the content that I'm consuming, kind of going back to the tariff thing, I feel like I'm not getting a lot of crypto content these days. Like I would say over the past half year, a year. Yeah, maybe that's just how I've curated my feed or whatever, but I'm just not getting questions about it either from clients. Like I'm not getting a lot of crypto or Bitcoin questions recently. And I find that surprising because Bitcoin's been on a bit of a tear over the past year. This year alone, Bitcoin is up, let's go back to January, 25% since January, and it is up a whopping 100% over the last 12 months. That's pretty huge. We
Yeah.
had those big drops and things in 2022, but Bitcoin is on a tear. Like for some context, the S&P 500's had a pretty awesome year over the past 12 months, and it's up 16%. Bitcoin's up 100%. But I'm not hearing, like, I'm not getting those crypto evangelists in my life being like, have you seen this? Have you seen this? Like a Bitcoin, it's growing. It's huge. I'm not getting that. It's more of like a muted response, like, oh yeah, Bitcoin's up 100%, whoop-de-doo type of thing. And I find that interesting because I wonder if we're moving, hesitate to say this, I wonder if we're moving into a more mature phase with Bitcoin here. Like it's really establishing itself as an asset class. If I want to say, like, it's as a legitimate place to put your money. There's some data to back this up, but crazy stat that I saw. This is really why I wrote about this. I want to talk about it. Bitcoin ETFs, right? So now you can buy Bitcoin ETFs for people who are unfamiliar. So instead of buying a Bitcoin directly through an exchange like Coinbase or something like that, Robinhood or someplace, you can actually buy ETFs like Charles Schwab or Fidelity. There's ETFs that give you exposure to Bitcoin without having to buy the Bitcoin directly, right? These ETFs in July took in almost $13 billion of funds in July. This is the highest month ever. And so for more context there, these Bitcoin ETFs took in more money than any single S&P 500 fund in July. I'm including like the mighty VOO, right, that everyone always invests in. The Bitcoin, again, overall with all of these, there's a ton of S&P 500 funds still took all that money and still more than Bitcoin. But more people bought Bitcoin in July than any single ETF. I find that pretty wild.
That is wild.
Where we are putting, like, it is just establishing itself as maybe I don't know if legitimate asset class. Again, I'm hesitant. I don't want to get people to get the wrong idea here, but I just think as a society, we're becoming more and more comfortable with cryptocurrency and Bitcoin. And I think we've talked about in the past, it is here to stay. I wonder if we're getting to a spot where we're not going to have the huge ups and downs of Bitcoin, but it's just going to kind of be a steady place for people to put their money. I don't know. Is that crazy to say?
No, I mean, I've said for a long time, I think Bitcoin is here to stay. I think it needs to be separated from like this crypto, just like overall crypto discussion. I think
Yeah.
it's clearly the winner. And this is what we've said for a long time of like, it's what we were saying before we even got on here talking about AI. Like it has definitely revolutionized a lot of things, and it's definitely like a legitimate thing, or the underlying aspects of it being like the blockchain and all this stuff. It's obviously legitimate. where the winners are is the hard part. But I think Bitcoin's been the clear winner for a long time. It's the longest standing one. It's been the one that's like, again, there's been ups and downs with it, but it's I don't think it's going anywhere.
Well, that's what I
So
think is interesting about Bitcoin to me is all of the Bitcoin zealots over the past 10 or 15 years, like, hey, Bitcoin's going to change our way of life. It's going to replace the dollar. It's going to revolutionize everything. We're going to get rid of inflation. All of the things that they have predicted have not come true. Like all of the things that they said Bitcoin would do, they've been wrong. It hasn't done any of those things. Bitcoin still has no real use case. It doesn't do anything. There are no cash flows. It's not a business, right? It provides nothing in value. Yet, despite being completely wrong, all the Bitcoin zealots, despite being completely wrong about everything, they've still made a ton of money right, over
yeah,
the past 10 years. That's what's so I find fascinating about this
yeah,
is they've been completely wrong about what Bitcoin would do and transform our lives. Yet the people who have bought and hold have been rewarded for that. And so it's one of those instances where you can be wrong about something, but still make money and kind of get into it there. And so that's still what's hard about if people are asking me, well, should I buy Bitcoin or not? It's hard as an advisor to really value Bitcoin as an investment, right? Where it's like, because there are no cash flows, there is no CEO on board, there's no use case for it. And so the price really fluctuates still depending on what people think about it. It's like art or something in that sense, right? Like what people value in it. And so it's hard as an advisor to be like, okay, well, how do we value this as an investment in your portfolio? It's hard to say still, but I don't know. We're still seeing that despite all of that and despite the uncertainty about what it should be priced at, it's become a legitimate asset class and people like putting their money into it. So
yeah.
it's interesting to me.
It's digital. It's become truly digital gold, a
But
a
even
digital
gold,
commodity.
the funny thing about gold is still a physical asset that's shiny, right? It's I
Sure,
don't
this
know.
is a digital version of it. Yeah,
Like this is I mean, gold doesn't do a ton, but it's still like a physical something. Bitcoin is literally again, it's a digital nothing,
yeah,
really.
yeah,
But people still are fine pumping their hard-earned dollars into it, and I just think that's interesting.
yeah. Let's get Rabih in here. He's sitting here. He's pensive.
No, I like this conversation. I think if we go with the new definition of whether it is a legitimate asset class, I would say yes, not because out of its own merit, as you guys mentioned, but because Wall Street has provided it with a legitimate
Yeah,
market for it
Yeah,
not to lose its status. Like, and I'm only talking about Bitcoin. I'm not talking about all the other coins because all the other
yes,
coins do not have spot ETFs and regulations regarding them. Only Bitcoin is a legitimate asset class, between quotations, simply because Wall Street is creating ETFs that take expense ratios, and now it's a running business that they don't want to. If people are there, they're going to provide you the service of buying it and trading it, etc. That is the first thing I wanted to say. The second thing, and I think why people are not talking about it, because and it is more of a sentiment indicator right now. What Bitcoin is, it was the sticker that lost the most money during the April crash of this year, but now it is second, third, tied with developed markets with like 4% for the year, right below gold, which is 26%. So it is more of a sentiment, and it's just an indicator that sentiment is good. And another reason for why people are not talking about it is because they're talking about they are distracted with other stuff. Mainly, if you go on like Wall Street Bets, etc., it is calls, which is heavily shorted, and they're trying to create a short squeeze, a GameStop scenario trying to replicate it, or American Eagle just popping 10% because Sydney Sweeney is there. Those stuff.
I mean, fair.
Fair, yeah. So they are now distracted with that. Once those other opportunities of distractions are not there, I think the conversation will go back to Bitcoin.
okay.
But it's just that they're distracted with other stuff. And if you zoom out, this is just an indicator that investors are in a euphoria type of zone,
Yeah.
not a
I
pun about
wanted
Sydney Sweeney, but more of like, they are in a euphoric state where they
What's
are
on your
taking.
mind, Rabih? You're thinking about Sydney Sweeney
I
today,
know,
or
it's so hard. It's food and girls, man. I can't get them out of my head. Anyway, but the idea is, I broke Matt.
you did?
The idea is when investors are chasing the next big thing and there are momentum of following one big ticker, etc. It's not about the ticker that they're following it, but it's more about the mental state that the investor is in at that point, which is more valuable.
Yeah, it's just wild to me that it's become a legitimate thing to put your money in, not because Bitcoin itself has done anything unique or special, but simply because people's belief in it is so strong that they've almost like manifested it to become a real asset class. I mean, the market cap, if you want to call it that, of Bitcoin is over $2 trillion. It'd be the sixth largest company in the world, right? If we viewed it in that sense. And so it's just wild that Bitcoin itself is not special, but people, for some reason, people's belief in it has manifested to become this
It is
thing.
kind of crazy to think of it from that sense. It's like we literally created something out of thin air that's digital gold, and
Yeah.
it's $2 trillion.
Yeah.
The irony that I always think of when Rabih was going through that is just, Jake, what you said earlier of like what it was supposed to be. It was supposed to be this revolutionary, break the market, become its own deregulated thing. And it's the exact opposite. It actually got consumed by the market. It's now
Mhm.
just been eaten up by like everyone else, now regulated and legitimized, which is great. But like you said, Jake, people are making a lot of money on it, but that doesn't mean like it's just become part of like this whole like battle cry of like what it was going to do. And it was going to like, again, change the game. It's like, no, no, no. You just got swallowed up by the game and now you're just a player in it.
To
Still
become
making money, but it's not what it was.
to my last thought here to come a little bit first full circle would be, I wonder if part of the crypto and legitimacy of Bitcoin too just comes from younger people. This is like their way. Like they almost wanted to create their own asset class. They're like, stocks is like, that's like the older generation's game, and housing, none of us are rich enough to buy houses. And we're kind of disenfranchised with how the economy's going. We're going to create this cryptocurrency thing and we're going to put money into it. We're going to believe in it because this is our asset, right? This is like the Gen Z millennial asset that we want to put money. I wonder if that factors in a little bit too, where it is people who invest in Bitcoin, they like the idea of it. It's almost like a moral, like this is our deregulated, they like the idea of it. And I think that's interesting.
But that is interesting. And the irony there too is what percentage of this is owned by billionaires? I think
True.
it's like
With all the bigger guys,
90 something
But it's
percent.
like the Elon Musk types of people who are kind of anti-institution, anti-traditional markets. Like they like the idea of being invested in something that not everyone else is.
Totally. Yeah, I think that's true. So, but yeah, I love this topic. I think it was worthy of talking about. Rabih, any final words on that? Bitcoin or anything else? Jake, I know we got to go. You got to go change some lives. Okay. Any final words of wisdom from Jake?
No, you guys are
No.
awesome.
Okay. If you're still listening, you're the cool ones. We appreciate it and appreciate Jake and Rabih being here, sharing their wisdom. If this was helpful or entertaining or fun or viable in any way, we'd love for you to share the episode with a fellow dentist. So we're trying to always spread the word of 2 cents in the Dentist Money Show. If you want to talk to us, go to dentistadvisors.com, click on the book free consultation button. We'd love to talk to you and hear your story. For now, that was our 2 cents. Thanks for being here. Have a good weekend. Till next time. Bye-bye.